It's going to be twice. This is the first one. Ending stocks, beginning stocks, which means ending stocks of 2006 and 7 was 62 million metric tons. We cut that sharply to 52. Cut that sharply so that last September 1 or so was down to 42. The projected this year, from the 42, 43, it's going to jump back up to close to 60. Okay, those are huge. On the other hand, it's not all bad. If we look at the world, crush is expected to be the same, and use. So use is only expected to go up a little bit. Production's expected to go up more than that, at 253. If we go back, it was 210 the year before. So we expect a huge crop, just a little bit more use. So next year is really going to be a pivotal type thing. Now, this still isn't the same as high as it was 3 years ago, but significantly extra stocks, and we'll see how that plays out in the market. So we come down through here. This number was actually lowered a little bit. A lot more stocks projected than last year. Not really burdensome. 7.5% of use to USDA's mid-range projections, about 965 right now. That's going to be a weighted price. We've seen prices drop a little below that, but remember, an awful lot of soybeans have been sold higher than that. So each month further we go, the less amount this average price can change, because an awful lot of that weighted price has already been solved. Probably over half the soybeans have already been sold in this first 5 months of the marketing year. So that number can change. It can even change quite a bit, but it's going to start to stick. Bigger crop this year, not much bigger stocks, and that's mostly explained by exports. A lot of stuff has been shipped out of the country, as shown there. We look a little bit more at soybeans. It's kind of interesting. Soybean production. Soy meal production we expect to go up a little bit from last year. We get down here to exports. We expect it to go up a million metric tons. That's not as much as I said last year. It started catching up a little bit. Kind of interesting as we looked here, even though there's more soy meal production, there's a lot more soybeans being crushed. We only have a little bit more oil being produced. Over the country as a whole, where last year was a little bit over 11 pounds out of that 60 they got up to. This year it's significantly, it's under 11 pounds out of the 60. So oil production isn't quite as good this year. As you see, this is methyl ethyl, that's soy diesel. It dropped from 32 to 19. A huge drop off. It's making a pretty significant recovery, nowhere near its peak, but there is some return to that. Why might that be? We didn't have very good returns, just the same thing over capital cost, but at least they're positive, and the market's thinking it'll be positive as we go out into the future. Of course, the further out we go, the more confident I am that you guys will forget what I said. So we go out here, and I guess we don't need this one. Soybean prices look like they're on a new plateau. They still go ending stocks go down, prices go up to some degree. This used to be my worst one, and now it's a little better because I can just drop this whole set of data here, and we're starting to make some sense up here. But remember, in the long term, soybeans are going to be about 2.4 times the price of corn. Depending on the relative input cost, they vary from about 2.3 to 2.5 because they compete for the same acres, and it's just amazing how farmers change. The last 2 years, as you all know, the planting intentions report and what actually was planted was significantly different. But it can almost all be explained by the change in relative prices between the time that survey was made and farmers hit the field. The futures price, the spread was zero. At one time last fall, the market was saying it'd pay you -6 cents to keep it from November to July. That's changed, but it's still not near enough to justify, but it's up quite a bit more. It's paying you about 3 cents a month, it's saying. I don't know who can store for 3 cents a month. However, the basis is quite wide in soybeans, and there's some chance of base appreciation, but I really don't think the basis problem has been fixed. I've railed so much against the CME group that I won't do it today, but they haven't fixed the problem. And notice they've done all kinds of things this summer to supposedly fix wheat, and it didn't fix it. There is a simple way of fixing it. Now I'm railing. That's just to make forced delivery. Soybean meal futures followed corn quite a bit. There was some pretty good pricing opportunities there. They've fallen off sharply. I had relative to corn being up there, I struggled a little bit more with soybeans being up there, but I guess I was watching South America too hard and maybe not exports quite hard enough. It's fallen off. I think it's probably pretty close to what fundamentals would suggest it would be right now. There doesn't seem to be much interest. The market doesn't seem too much interest in to recover much of that. Still huge risk, and that's because the South American crop's still out. And this world demand thing, how strong it is kind of amazing. Again, if we go to July, the risk is huge. I talked a little bit already how I got to these soybeans, where there might be some more soybeans, just soybeans instead of soybean wheat. Good deal more soybeans, I think, in South Dakota and some other places. The rest of them, I think that there'll be a little bit of change as we go across the country. Soybean yields, I still used a 1978 out to get the soybean trend yield. And so does the USDA. If I go to 1991, it looks exactly the same. The 2010 trend yield would be exactly the same no matter which number of years I used, or within 1/10 of 2 of a bushel. That happens to be 43 bushels an acre, times even more acres. Remember, this was record soybean acres. So I'm saying more, but I had corn even pushed up. It's other crops that are falling back, primarily wheat. We're bringing in bigger beginning stocks, a little bit less production because of the lower yields. But that means because the beginning stocks will probably end up with more. Of course, it doesn't mean we'll have trend yields. I'm pretty optimistic on this crushing number, maybe too optimistic. I'm really thinking that the meat market in the rest of the world will be growing. Actually, though, if I lowered crush a little bit, because if that's too optimistic on my exports of oil and meal, I could probably raise this number a little bit, so I'm not too bothered. Basically, I'm not saying use will be a little bit higher. Use will be higher, not as much higher as production, and I see us struggling a little bit as we go into the next year, and I see soybean prices probably falling off a little bit. But if you look at the market here versus today going in, you look at January of both years and March, they're not a lot different. The market's a little bit more optimistic than I am, but it's not very much different than what the market's pointing out. I can't find a real, technically, that the thing's saying much. I think it's, other than a couple of these highs here, I think it's followed fundamentals pretty close.